Welcome to our executive interview series. Today, we have the pleasure of welcoming Rob Hay, Head of Distribution and Investor Relations at Collins Street Asset Management, to our studio. Collins Street Asset Management is a founder-led investment firm that manages a range of funds, including its flagship Collins Street Value Fund and the recently launched Special Situation Fund, focused on global gold and precious metal stocks. Rob is here today with us to talk about this exciting opportunity for sophisticated and wholesale investors. Thank you for joining us, Rob.
Thank you, Rhythm. Great to be here.
Brilliant. Now, to begin our interview, can you tell us about the investment philosophy and the strategy behind the Special Situation Fund? And also, how does it actually differ from other investment offerings in the market?
Rhythm, Collins Street Asset Management is fundamentally run by investors for investors. We're not seeking to chase the institutional imperative of relative returns or being all things to all people. At the heart of what we do is a desire to make a difference and to help wholesale and sophisticated investors preserve and grow their wealth over the medium to long term. Now, the way we go about doing that is with a very deep value investment philosophy that's high conviction and unconstrained. And so when we're looking at investment opportunities, we're looking only for those most compelling and asymmetric opportunities in the marketplace. Now, you mentioned before our flagship Collins Street Value Fund, and within that fund, we've recently built up a good 15% position across convertible notes and direct equity positions in Australian listed gold stocks. And of course, whenever we're looking at investment ideas, particularly in the gold or energy space, we do look at international competitors to get a sense of perhaps where they lie on the cost curve relative to international peers, where the challenges and opportunities might be, so that we get a really well-rounded view of the company. And when we were looking at the gold companies within the value fund, we found an incredible disconnect between the price of gold and what had been happening in the junior, small to mid-cap gold space. And so for that reason, we felt that we'd open up a new opportunity, because we don't want to have too much gold in our flagship fund because it starts becoming a little bit overweight there. But we thought we'd open up an exclusive gold and precious metals fund to give those investors who are bullish on the gold thematic and who are looking for some really deep value, medium-term opportunities to introduce that into their portfolio.
Amazing. That's very impressive. Now, given the current global economic climate, can you discuss what macroeconomic factors would make this a good time to invest in gold and the precious metal sector?
We feel there are a number of interesting macro themes at play at the moment, Rhythm. And firstly is the idea of negative real interest rates. Now, inflation, which is one part of the equation, is something that we feel, at least over the medium term, is going to be really ingrained into the economy. And there'll be a few reasons for that. Firstly, energy prices continue to be high. And whilst it is certainly a worthy goal to push towards renewables over time, the market has really overestimated the speed at which that transition can occur. And so we've seen a real supply side squeeze on new projects in the traditional energy space, which has been pushing up prices for a lot of people.
Yeah, absolutely.
Alongside that, interest rates have had to go up to combat the inflation, and energy is just one part of that equation. The onshoring of manufacturing post-COVID, agriculture, food security, those sorts of things also play into it. But interest rates have been going up in order to combat inflation. Now, it's our view that interest rates can only go so far, both domestically and abroad. And the reason for that is governments have taken on so much debt on their balance sheet, be it at a federal, state or local level. And if central banks go too far, they're going to risk blowing up their own treasuries. And so there will become a point where interest rates have to pause, or perhaps where we see interest rates actually pivot, both domestically and abroad. And when we see that happen, when interest rates are here, but inflation is here, we have negative real rates. And that effectively reduces the opportunity cost of holding gold and makes it a more attractive option for central banks, for large institutions, private investors to start increasing their allocations. And already through 2022, Rhythm, we've seen central banks increasing their buying of gold Central banks, funnily enough, are not the major purchasers of gold. It's actually the retail consumers in certain countries focusing on jewellery and cultural reasons and what have you. But the increase in the buying of gold by central banks has been really strong. Certainly currency plays into that, geopolitical insecurities and a range of other factors. But we feel that at least with a medium-term view, the outlook for gold is strong, that the macroeconomic factors will support that, and that the window of opportunity available will be really quite narrow. And when the opportunity presents itself and things start to move, they could move really quickly.
Amazing. That's understandable. Now, you mentioned that the Special Situation Fund is very unique in its approach. So it would be great if you could elaborate on how you actually go about identifying these compelling opportunities.
Yes, Rhythm. So as we say, we are run by investors for investors. And when we're looking for ideas, we're looking for those that are genuinely compelling on a standalone basis. Doesn't matter where they sit in an index or what their weighting might be. We do want, of course, to be investing in those companies which have tier one assets in tier one jurisdictions, because there's no shortage of opportunities in the gold space, but you don't want to be buying a glorified goat paddock. And so what we look for are late stage explorers, companies which already have the geology broadly in place, and it might just be a case of firming up resources from a JORC reporting point of view, or early stage producers. Because mines, as you would appreciate, are depleting assets. There's only so much ore in the ground, and the more of it you've dug out, the less of it there is to dig out. And so early stage producers have a great runway of production. And of course, Rhythm, the saying goes that the opportunity of a lifetime has to be captured within the lifetime of the opportunity. And so you want to make sure that these companies genuinely can capitalize on gold prices where they are. You don't want to be betting on gold prices going to the moon. And certainly if they do, this will help this thesis no end. That will be a massive tailwind. But even if gold prices stayed where they were at the moment, the disconnect between the price of gold and the price action that's been happening in the junior, small to mid-cap gold space is quite compelling for investments there.
Amazing. That's very impressive. Now, given your team's track record, can you discuss why sophisticated and wholesale investors should consider investing in this fund, especially outlining what differentiates it from other offerings in the market?
Certainly the track record of the investment team, Michael Goldberg and Vasilios Paparoglou, has been quite strong over time. The flagship value fund has averaged about 14% per annum net of fees since it started in 2016. And our first Special Situation Fund, which was launched back in 2021, focusing on the international offshore oil and gas servicing sector, is up about 65-70% net as we are today. Now, of course, Rhythm, past performance is not a reliable indicator of future performance, so we can't hang our hat on that, or certainly we can't make any promises of that into the future. But where we see the opportunity for sophisticated and wholesale investors here is that we have an investment which is absolute return focused. We're not chasing returns relative to an index. And so we don't have to go and hold large cap gold stocks just because they're big and everybody else has one. In fact, you find a lot of the institutions and larger fund managers, Rhythm, who buy into the narrative around gold and who share our optimistic view on it over the next 3 years will be investing in the space. But they're naturally going to be investing in those companies at the top end of town, which are on very high multiples and for us as deep value investors are just simply too expensive. We do have good relationships in the space. We've been investing in gold within our flagship value fund since 2019 and have got to know directors, senior managers and so forth, and plenty of other people within the broader gold space who have helped inform our thinking. And certainly, you want to ensure that there's good governance and good teams supporting what it is you do. And so Michael and Vas, in their roles as our primary investment decision makers, are constantly meeting with people in the space, really interrogating, trying to understand whether or not they have the right skill set, whether that skill set is the right skill set for this stage of the company, and if this company is actually one which is going to deliver the sort of outcomes we're looking for our investors. So this is a professionally managed fund with ongoing active management and research behind it. And importantly, Rhythm, we don't have any fixed ongoing management fees. We don't get paid 1% per annum or whatever else it is simply for turning up. It is a performance-driven fund, and that performance applies at the end of the term when we eventually wind up investments. So we are aligned. We do have skin in the game, and our investors do have to generate a profit before we become eligible for those performance fees.
Amazing. Thank you for highlighting those points. Now, can you speak more to your investment team's track record and how that has informed the approach to managing this new fund?
Certainly, the experience that we've been able to develop over the last 4 to 5 years has been quite extensive. Getting to understand teams, getting to understand customers, suppliers, different participants, because as the old saying goes, your reputation does precede you. And the work that we do with boards of directors, the way in which we're able to observe them over time and get a real lived experience of how they bring opportunities to life is absolutely key. The other key point here is that the team are not looking to hold 50 to 100 to 200 companies within this special situations fund. We're really looking for a portfolio of 12 to 20 of our absolute best ideas that are listed either domestically or abroad. So there will be a global element to it as well. And to be fair with them, it's really hard to find good investment opportunities these days. And if you do the work and you do the due diligence, you don't want to dilute a great idea by introducing a lesser one into the portfolio.
Absolutely.
So we very much view this as being a high conviction portfolio of actively managed exposures to the gold and precious metal space, both domestically and abroad.
Amazing. That's brilliant, Rob. Now, as a parting question, can you tell us that looking ahead, what is your vision for the future of Collins Street Asset Management?
Collins Street Asset Management has been on a wonderful growth trajectory since it was founded in 2015, with the flagship fund launched in 2016. I think it'd be great over the next couple of years to see us reach capacity in our Collins Street Value Fund. And from there, where really compelling special situation opportunities arise, to be able to capitalise on those and bring something truly unique and compelling to our clients periodically as and when those ideas arise.
Brilliant. Well, thank you so much, Rob, for taking the time to coming on to our studio and sharing these wonderful insights about Collins Street Asset Management and the Special Situation Fund. For anyone who's interested to get in touch with the team at Collins Street Asset Management, please see the details at the side of your screen or in the description of the video. Again, thank you, Rob, and I wish you all the luck with your venture.
Thanks a lot, Rhythm. Have a great day.
Thank you.